What could you do with an extra $284 a month? Your Netflix bill? Your Disney Plus bill? Or this money could be used for your cell phone. Wait a minute, that's not a cell phone, get out of here. This money could also be used to help out with your groceries every month. And this money could be used to help pay for your monthly Wi-Fi bill. That's $284 a month times 12 months equals $3,408 a year. And all of this money is earned from passive dividend income. I'm Quizzy 101, and welcome to my first YouTube video. So what is a dividend? Let's say you want to invest in a company, you're buying its stock. The company takes your money and could use it in several different ways, such as increasing its operations and expanding into new locations or countries. Or it could use your money to pay down its debt. Or the company could use your money to fund new projects and service offerings. Think of Apple researching the next iPad or the next iPhone. As the company becomes successful, thanks to wisely using your investment to improve its earnings, the company will announce a dividend payout in the future, sometimes weeks in advance or months in advance. This is the dividend passive income that you get from the company on a consistent basis and is yours to keep. Most companies pay out their dividends quarterly, but some companies could pay out dividends on a monthly basis. Think of the dividend as this. It's a reward, or it's a thank you, or it's a form of giving back from the company for being one of its shareholders and believing in the company and investing your money into that company. Alright, let's look at dividend amounts with companies that you know. Let's take a look at Starbucks. Starbucks has a dividend yield of 1.67%, and Starbucks pays an annual dividend amount of $1.79 for every share of Starbucks that you own. So if you owned 100 shares of Starbucks, your annual dividend income from Starbucks would be $179, as long as the dividend amount stays the same throughout the whole year. If you owned 500 shares of Starbucks, every year you would earn $895 from dividend annual income. And if you owned 1,000 shares of Starbucks, the annual dividend payment amount from Starbucks would be $1,790. You can own however many shares of Starbucks that you want. It doesn't have to be 100, 500, or 1,000. These are just examples. But with these different amounts, you can see that the more shares that you own, the more dividends you earn. Amazing, right? Alright, let's look at AT&T. AT&T has a higher yield than Starbucks at close to 7%. AT&T pays $2.06 for every share of its stock that you own. So again, owning 100 shares of AT&T stock, you would earn $206 a year in dividend income, as long as the dividend amount stays the same throughout the whole year. If you owned 500 shares, you would get $1,030 a year. And if you owned 1,000 shares of AT&T stock, you would get $2,060 in 1 year, just from dividend income. And again, as a reminder, most companies that pay out dividends pay out on a quarterly basis, which is every 3 months. However many shares you own on a certain date, the dividend payment amount is multiplied by the number of shares that you own, and that would equal your dividend check. Alright, so why does AT&T have a higher dividend yield than Starbucks? All companies choose their price that they pay out in dividends. Paying out dividends is an incentive for possible new shareholders or even current shareholders looking to increase their number of shares in that company. A company's stock may be more appealing as well if a company continually pays out a dividend every quarter, year in and year out. Just like with this example of AT&T, which has paid out dividends every year since 1984. The dividend yield percentage is found by dividing the annual dividend amount by the current cost of one share of that stock. So in Starbucks' example, one of its shares costs approximately $107.81. Its annual dividend amount per share held is $1.79. So dividing 179 by 107.81 equals 1.67%. That's the dividend yield. And with AT&T, you do the same thing. You divide their annual dividend amount per share held of $2.06 and divide that by their current approximate stock price, which is $29.81, and you get the dividend yield of 6.98%. The dividend yield is a good indicator to let you know how much the dollar amount is of a company's dividend based off of their stock price. It's quite possible for a company to have a lower dividend yield than another company, but still pay a higher dollar amount for its dividend. That just means its stock price is higher than the other company. One example of that is with 3M. Again, companies set their prices for their dividends, not the government, no one else. Also, dividends are not always guaranteed. A company could choose to slash its dividend payout amount or get rid of its dividend altogether if the company is not succeeding. On the other hand, dividend prices could go up as well, as we have seen with major companies such as AT&T and 3M, increasing their dividend amounts for their shareholders year after year. In my experience with dividend investing for the past several years, the companies that I have invested in, well-known name brand companies, still continue to pay out dividends on a consistent basis, even despite last year's stock market crash at the beginning of the pandemic. Some of these companies did indeed slash their dividend payout amounts, but they still paid dividends and their stock prices were lower, which allowed me to accumulate more shares at a discounted price than what the company's stock usually sells for. And as I stated earlier, when you increase your number of shares, you increase the number of dividends that you get every quarter. And as you learn about dividend investing by watching my videos, please understand that we are just talking about the stock's dividends for most of the time. Please also keep in mind that as you're accumulating shares of your dividend stocks, those shares are worth something as well besides being the ticket to earning passive dividend income. Successful companies usually have their stock prices appreciate over time, going higher and higher, and worth more to you in the future. In the AT&T example, you're making $206 a year from dividend income if you own 100 shares of AT&T stock, and the value of those 100 shares by themselves is $2,981. Okay, back to the chart. Part of my dividend investing strategy is investing in companies with a dividend yield of at least 3%, because if I wanted something earning lower, I would just leave all of my money in a savings account, which is not a great idea based on the national average interest rate for savings accounts, which is about 0.07%. Even the highest yields for savings accounts across the nation is 0.6% per this bankrate.com article. Look at these dividend yields compared to a savings account interest rate. Even Starbucks, with a low dividend yield, returns higher than keeping money in a savings account. It's really important to have diversification though. No one is advocating removing all money from savings to buy dividend stocks, but if you're able to start dividend investing with $50, $100, $500, see how much more that money will grow in dividends than with your savings account. Along with diversification, another reminder is that it's always important to have an emergency fund for paying for unexpected events. Look, dividend investing is not a secret and it's not a get-rich-quick scheme. It is absolutely amazing to see how the money grows and grows and grows. Here are some other great examples of dividend-paying companies. General Mills, lots of cereal eaten during the pandemic. 3M, paying dividends consistently for 100 years without interruption and has increased its annual dividend amount for 62 consecutive years. That is amazing. That is a sign of a strong and stable company that rewards its shareholders with a dividend that keeps going up and up. And lastly, one of my go-to dividend stocks is AGNC Investment Corporation. This one pays its dividends on a monthly basis, and its dividend yield is 8.74%. There are many different types of investment strategies out there, whether you're interested in day trading, swing trading, options trading, or maybe property investments to establish some rental income, or maybe you want to delve into cryptocurrency trading. There are many types of investment strategies out there, but I personally love dividend investing as my main investment strategy because I have a full-time job, so I don't have time to look at the stock market every day to watch the numbers go up and down minute by minute. That's not a knock on day trading at all. I think it's awesome to see that in action, but it's not for me right now. Dividend investing also doesn't require a large amount of research to make informed decisions. You could spend up to 2 hours researching big name brand companies to invest in that have paid out dividends for the last 10 years, 20 years, 100 years like 3M. Lastly, dividend investing is considerably lower risk than day trading, swing trading, and options trading. You're investing in well-established companies that you've heard of for the long run. The single most motivating factor for me though, with how I started with dividend investing, was several years ago when my coworker told me that he and his wife made over 6 digits every year just from dividend income. And this is on top of their salaries too. An extra $100,000 a year, at least. He wouldn't tell me the number. I mean, really though, $100,000 a year divided by 12 months, $8,333 a month. That's a heck of a lot of cell phones. As soon as he told me that, I started researching, I started reading, I started watching, and I started investing with $100. I had changed jobs back then, and I didn't want to roll over my 401k money. I wanted to roll it over to an individual retirement account, an IRA, since I wanted to choose the stocks to invest in. And guess what? All of those stocks in my IRA account pays a dividend. As I said before, dividend investing is amazing to see in action as it grows and grows. And as a disclaimer, I can't tell you what to do with your money, but I can show you how I invest in dividends and how it's been growing for me in the past couple of years to where I make more than $3,000 a year from it, and it keeps growing and growing. It's not complicated, I enjoy it, and I'm excited when I talk to my family and friends about dividend investing. This channel and my website is where I will share with you my experiences from when I started with dividend investing as a beginner. By sharing what I've learned, I hope that I save you some time if you're just getting started with dividend investing or investing in general. The methods that have worked for me, the things that didn't work out so well for me, and the things that I would have done differently with what I know now. On my website, I like to track how much money in dividends I've earned in that month and how much that equals annually. So I started tracking this back in September of 2020, and I was earning $240 a month in dividends, which equals out to $28.80 a year. As you can see, the number has grown to $244 a month in October, $251 in November, a slight uptick to $252 in December, and $273 in January. Finally, $284 a month in February, which equals out to $34.08 a year in dividend cash. A few years ago, I was actually close to almost $5,000 a year in annual dividend income, but I had some real life events happen, nothing major, but I had to sell some of my stocks, including the dividend stocks. But I've seen my dividends grow once, and I know that they'll keep growing again and again, and I thought it would be cool this time to track it, with the goal of surpassing $5,000 a year in annual dividend income. So much more to share with you on my channel. The purpose of this channel and my website is not just about dividend investing, but about dividend reinvesting. This is where the magic really happens. Thank you so much for watching my first YouTube video. This will be the first of many to come. Please like and subscribe if you found this video helpful, and please leave me a comment if you have any questions or any feedback at all. What other topics would you be interested in? Thanks and take care.